Hey, what's going on, everybody? Hey, welcome back to another video lesson. All right, so in this video lesson, I'm going to talk about how to trade divergences, okay? So this is a must-watch video if you're interested in learning the best ways to trade divergences. And stick around to the end because I'm going to share with you how you can get my brand new indicator, the Forecast Pro, okay? So if that sounds good, you know what to do. Hey, subscribe to the channel if you haven't done so yet. 2, hit that little bell to be notified whenever I shoot a brand new video. And 3, and make a nice comment. I really appreciate it. Doesn't cost you anything, and it helps support the channel. All right, let's roll that beautiful intro. All right, everybody. Hey, so welcome back to another training video lesson. I'm super excited about this lesson. We're going to be talking about divergences, all sorts of different things about divergences. And at the end, I'm going to share with you my favorite indicators that I use to spot these divergences, okay? So let's go ahead and jump into the video lesson. All right, so let's talk divergences. Now, first, I got a lot of emails from people asking me if I could incorporate more slides. So not just talk, share concepts, but actually have some written slides. So that's what I've done. So what I'm gonna do is I'm gonna go through some slides, I'm gonna do some talking, and I'm gonna show you on the charts what I'm talking about. So how to trade divergences. Now you see here using the Forecast Pro Ready and Fire. We'll get to that in a minute, but let's go ahead and dive into this here. All right, so today we're going to discuss one of the most important lessons about trading. Again, I feel it's one of the most important concepts that you're going to need to know. So if you want to become a successful trader or investor, you must learn to trade divergences like a pro. Okay? Now, there's many ways to trade. I love the divergence strategy, and in my opinion, if you're going to truly become a successful trader, you must learn to trade divergences like a pro. Now, divergences should be one of your most important tools because they signal momentum coming into the main trend, or they indicate a possible reversal when the trend is over. So let's talk about that really quickly. So number one is, let's say you have an uptrend, it's pulling back, so the momentum is dying down, you get a divergence. So this could signal basically that momentum is coming right back into the trend to resume it, right? For some of you that watch the Ready, Aim, Fire Pro, they got those thrust bars. Well, those thrust bars are good indications whenever the momentum is coming back into the trend and it's about to accelerate. So another thing with the divergences are possible reversals, right? When the trend is nearly over. So maybe we're in an uptrend, we're screaming to the upside, you got a lot of profit, now you're like, hey, when do I get out, right? When do I protect profit? Well, a divergence can be a good indication to say, hey, listen, let's go ahead and move our stop loss up and protect profit. Or, for example, in a downtrend, you're like, well, when is this gonna reverse and go back to the upside? Well, a divergence is a good indicator to help give us a clue when we're gonna get a potential reversal or at least a snap back to the mean. So if you master divergences along with price action, support, and resistance levels, then you can use this concept to trade stocks, options, Forex, and yes, even crypto. So we talk about price action a lot. I know inside of my school, I focus a lot on price action, a lot on support and resistances, or support and resistance levels. So if you can master the divergence with these concepts, you can trade anything. And it doesn't matter what market it is because, again, it works on all markets. So by the end of this video, you're going to learn a couple things. Number one, how to easily spot a divergence. And number two, my favorite 2 indicators that I use to trade divergences. And I'll probably give you a bonus, number 3, but at least those 2. So how do we spot them, right? So first of all, what is a divergence? Now, almost all technical indicators track the evolution of price movement, meaning that they like price. So an indicator, for example, its basic function, its technical function is to track price, right? If price is going up, we expect the indicators to going up, right? That's what I mean by they like price. They like it. That's their friend, right? Trend is going down. The indicators are going down, okay? Now, most indicators are lagging indicators, okay? That's why most of them are. Now, some might argue that some of them are leading, but for the most part, indicators lag, right? I talk about a concept in my course of the horse pulls the cart. The horse is price. The cart is an indicator, and price brings the indicator with it. Now, when a stock moves upward, so I'm going to get my drawing items too. So when a stock moves upwards like this, okay, we're expecting the indicator to move upward, right? The higher highs on the indicator, higher lows, higher highs on price, higher lows. So when a stock is moving upward, the indicator also moves upward. When the stock is moving down, we expect the indicator to be moving down, right? No problem. We'll show that here in a second. So that is a convergence. Well, you know what? Let's go ahead and just cement these concepts. So what we're going to do is we're going to do some talking, and I'm going to share with you some of the charts. So remember, this is what most indicators do. So let's just take a look right here. And again, this is EOG. It just happened to be the one that I had on my screen. But right here, price is going up. Price is going up. This is going up, right? You'll see in a minute the divergence. We'll talk about that because there's a lot of them on here. But, I mean, for the most part, that's what it is. Now, I've got a couple things. So this is the Squeeze Pro. Look at the Ready Aim Fire. Here, right? Price is going up. We would expect the indicators to go up. Okay, and when price is going down, we expect the indicators to be going down. So like right here, low, low, low. I mean, you guys get that concept, right? I mean, most of y'all watching my videos understand that. That's what indicators do, right? They follow price, but they lag. Okay, we're not talking about entry techniques right now. We're just talking about good old what the indicators do and what they don't do. All right, let's go back into the PowerPoint. And that's why most indicators are lagging indicators. Now, I use the word most because some people might argue certain indicators are not lagging, but again, that's for another video. Think of it like this. This is what I talk about with my students. The horse, and then you have the cart. The horse pulls the cart. The indicator is the cart. The horse is the price action. So the price action pulls the indicator, right? So the indicators lag. Price action leads the indicator. So when a stock is moving upward, the indicator also moves upward. So, for example, if price is making higher highs and higher lows, we would expect the indicator to be doing this, right? The highs are getting higher, and the lows are also getting higher. Pretty standard stuff. For those of you that have been in the trading world, you know exactly what I'm talking about. Now, when a stock is in a downtrend, we expect the indicator highs and lows to be going down, right? Just like the price. Now, remember, price leads the indicators, right? Price, which is the horse, pulls the cart. So that is called a convergence when they are in sync, right? No problem. So, what is a divergence? If we got a convergence, what is a divergence? Well, it's a visual discrepancy between price and an indicator. It's a non-confirmation. I'm going to show you some charts in a minute. Do not worry, okay? But that's what a divergence is. It's when it's out of whack, right? There's a discrepancy. Remember, we're expecting price and the indicator to be moving in trend, right, or in sync. But when they're out of whack or out of balance, we get this divergence. It's a non-confirmation. Now, there's two types of divergences. There is a regular divergence, and there is a hidden divergence, and we're going to talk about both. So first, let's talk about the regular divergence. So a regular divergence is considered a leading indicator because it can identify with really good accuracy tops and bottoms. So we can use this divergence whenever it occurs as a leading indicator, right? So this time, whoop, the horse is being drugged by the cart. Doesn't happen all the time, but it's a really good indication. It also helps signal possible market reversals or short-term corrections, and it's good for entries and exits. So that's what we're doing here. These are short-term corrections in the divergence. Now, there are divergences that are short-term in nature, but then there's divergences that can shift the trend altogether. So if it's going down and you get a divergence, you might get a snap back to the mean, or you might get a full-fledged reversal. Okay, but in this case, it's acting as a leading indicator. Don't worry, I'm going to show you plenty of charts. So a regular divergence has two patterns. And remember, stick around the end because I'm going to share with you my brand new indicator, which is spots these like crazy. A bearish divergence and a bullish divergence. So what are the difference between the two? So number one, a bearish divergence appears in an uptrend. You see here, when price is making higher highs and the indicator is making lower highs. So price is going up, higher highs, and the indicator is making lower highs. So the price is going up, indicator is going down. And a bearish divergence occurs in an uptrend. So let me share with you, I got a chart that I had just pulled up a minute ago. This is EOG. Okay, nothing special about EOG, but for example, this is the TTM Squeeze Pro, and this is the Forecast Pro, and this is the Ready Aim Fire. But let's just again talk about the concept. Look right here. Price is going up, indicators going down. So this can signal a short-term correction. And again, it doesn't mean that the trend is going to reverse. It just means a short-term correction. So like right here, you had a high, look at the indicator, okay? And then it started to flatten out, and then it went down, okay? Now, let's take a look at it right in here. Go to that same area. Okay, so that same area of right here, you see right here, boom, this line, it drew, showing us that, hey, there was a divergence. So this one, I mean, it's more visual as far as you've got to look at it, but right here, okay, boom, you had two divergences back to back. But look at this, right there, clearly, price is going up here, indicator going down. It's got this red dot, and it's got this line. Here's another one. An equal high, there's the divergence there. And it represented a short-term shift in momentum. Because remember, it's not necessarily a full-blown correction, short-term shift in momentum. Look at this. Boom, divergence equal tank. And again, you can do it on the Ready Aim Fire Pro too. Down, flat. So it doesn't have to be just an uptrend. It can also be an equal high. So an equal high in price, but then a lower low on the oscillator. So let me see if I can find one more. So like right there, it's heading down, kind of heading up. I mean, you can see them everywhere. Equal, you can start to see how this starts to go down. So it's alerting us, hey, listen, it could be having a correction here pretty soon. So that is a, let's go back to the thing. So that right there is, boom, a bearish divergence. Appears in an uptrend. So a bullish divergence appears in a downtrend. When price is making lower lows and the indicator is making higher lows. So let me see if that's the last one on that. Okay, so before we jump into that, so lower lows in price. So let's go back and let's kind of look at that same chart to see what we can find. So now we're looking for a bullish divergence. Okay, kind of, here's something right here. So price is going down, and look at this, right? You can barely see it, but boom, this indicator, and I'll show you some more later, is going up. Okay, or even, I don't know if you can see it as much on the Ready Aim Fire or TTM Squeeze Pro, but take a look at this. So the indicator is sloping up while price is sloping down. Okay, and sometimes some of these indicators, you know, are kind of giving you conflicting messages, right? They don't always show divergences. So let me find a good divergence using this one right here. And again, I'm going to go into a lot more detail on that later. So I'm just going to pull up really any chart. And let me just back out. And let's see if we can find a divergence real quick. Okay. Now, everything's been going up as of lately. So let me just back out. Let me go 2 years and back out. All right, it takes a couple minutes for the chart. All right, so what I want to do is, okay, here we go, I see one. Let me zoom into this box right here, okay? All right, so you notice right here, price is going down. This line and these green dots, the indicator's sloping up. So price is going down, this indicator sloping up. And this one actually led because with the RAF Pro, there wasn't no divergence. With the TTM Squeeze Pro, there wasn't no divergence. Now, let me show you another one. And again, just remember the concepts right now. It's price is going down, lower lows, and then you're getting higher lows on the indicator. So let's go to, boom, this one's really clear on the Forecast Pro. So price is going down into an upsloping 200. Look at this. Going up, and again, the RAF didn't have it yet, nor the squeeze, but right here on the Forecast Pro, it visually showed me, hey, listen, the oscillator is starting to gain momentum while the price is losing momentum, okay? And let me just kind of flip to another and see if I can find one that has a good divergence on all of them. Okay, so this one right here, if you look at it, this is Merck. You have equal lows, you have a higher low, okay? So again, it's the same thing. If it's an equal low, it doesn't have to be a lower low. It can be an equal low in price, but you see how this is slanting up into that squeeze? Boom, right there was a divergence. Right there, you could have caught some moves. So this line showed us a divergence there. We still kind of had a divergence. Check this out. There is a slight divergence on the ready-aim fire. So if you look at it, look at these lows. They're slanting up, and this was more of an equal low, okay? So, again, oscillators work differently. Some pick it up better, but you get the idea, right? And again, I know some of this might be basic for some of you, but that is a bullish divergence. Now, what is a hidden divergence? Some of y'all may not have heard of this concept. Maybe you're just, you know, that regular divergence that we always get, right? Well, here is a hidden divergence. A hidden divergence has two patterns, just like the regular divergence of a bearish divergence and a bullish divergence. All right, so let's talk about the concept of a hidden bullish divergence. Lower lows are double bottom on the oscillator or indicator and a higher low on the price in an uptrend. So let's visualize an uptrend, right? Stack moving averages, everything good. So higher low on price. Let's just start with that, right? Higher low on price. And then lower lows are a double bottom on the oscillator or indicator. So that might look something like this. Like that. Boom. A lower low on the oscillator indicator, but a higher low on the price action. And again, this might be new, but that's a hidden bullish divergence. But it happens in an uptrend. So when you're in an uptrend and you're looking for this and you're saying, okay, I've recognized it's in an uptrend, you want to see that oscillator basically doing the opposite, right? That's why it's called a divergence. Let's go see if we can find a hidden bullish divergence on the chart. Remember, it happens in an uptrend. So let's go check it out. And I'm just going to randomly pick any chart. Okay. So the first thing we want to do is we want to look at an uptrend. So let's just go ahead and go to a period where we know we had an uptrend. Kind of extend it out. This is Schwab. And let's see if we can find a hidden bullish divergence. So let's go here. So in this case, we got our price action. Okay, it's going up. It's going up, right? We can clearly see that. Now, let's go back. I just want to make sure we got it. So right here, higher low on price. So let's kind of go to higher low on price. Okay, so let's just do the lows. So we've got these lows going up, right? These lows are higher. So what we're looking for is higher lows, but now we want that lower low, right? That lower low. Boom, right there. So like in this particular case, we've got a lower low and we got a higher low. I mean, again, these are hidden. you may not see them, right? But that's kind of the thing. Now, that same time period, let's kind of go here. So we're going to take that time period where it was slightly up. And in this particular case, we didn't really get nothing there. Okay, but let's kind of look here on this one. And there you go. Look at that. Boom. Right there. You can kind of barely see it, but there's that blue line where if you connect the lows, it's going down. You could even go to this low right here. So this is a clear, hidden bullish divergence. So just think though, it's in an uptrend. The lows are going up, but then the oscillator is going down. Okay, we don't have anything on the Squeeze Pro, but kind of there. You guys get it right here. Oh, let's look right here. So this is an equal, and this is a lower low. So remember, on the price, it can also be an equal low. So a higher low or an equal low. But again, you guys get it. The price is going up, the bottom lows, indicators going down. So look at this one. Boom. That is a clear hidden divergence, right? So if you take the lows are clearly going down, and the lows on the price is clearly going up. So that's a bullish, okay? Just remember the concept. And again, that might be new for some of you guys, but it's a pretty powerful. It is a pretty powerful signal. All right, so now let's talk about the hidden bearish divergence, okay? So now we're gonna just switch our thinking, right? So what this one is, higher highs on the oscillator indicator plus lower highs on the price. So an easy way first is it's in a downtrend, a downtrend. That's what you need, and I put corrections for a minute, but just remember downtrend, okay? So when it's at a downtrend, we're looking for these hidden bearish divergences. And what it is on the price, it's got lower highs, okay? Lower highs on the price, higher highs on the oscillator. So the oscillator would be doing that. Higher highs on the oscillator and lower highs on the price. But again, the easy way at first is just recognize what's the trend. And when it's whenever you can clearly see it's down, we're watching the highs. So it's lower highs and then higher highs on that. So let's go see if we can find it on a chart. All right, so let's take a look at 𝐶𝐻𝐼𝐿𝐼. Just randomly picked one. Okay, so remember what we're looking for is a hidden bearish divergence, right? Let's just make sure, right? I just want to make sure we're on the same page here. Hidden bearish divergence. Remember, lower highs in price. So we got to be in a downtrend, right? So like I see this downtrend right here in this period. So let me draw it for you. So you got a high, high. Okay, so we got lower highs. What we're looking for in the oscillator is higher highs, right? It's a hidden divergence. So you got lower highs. There's no divergence here. So these are not hidden, right? They're in the direction of that. So let's just kind of keep going. So again, let's kind of look, back it out. Let's just pick a chart. Again, I'm looking for a nice, really clean downtrend. Let's try this area over here. Okay, let me zoom into this little downtrend area. Kind of right here, see if we can find it. All right, so we got here, we got our lower highs, and all of a sudden, bam, higher lows. Then look at this, lower highs. We've got, in this case right here, higher highs on the oscillator. So, lower highs on price, but the oscillator is making higher highs, okay? So again, they're hidden, right? A lot of people don't talk about that. But I mean, what you want to do is just recognize first, is it in an uptrend or downtrend? If it's in a downtrend, then we're watching the highs and lows. So in this particular case, if right here, and again, I'll draw it. I really want to cement this concept. If we are looking at lower highs on the price, bam, higher highs on the oscillator, then that is a hidden bearish divergence. Study that. You're going to start seeing these everywhere. Now, here is the main differences. So write this down for your notes. A regular divergence, we're looking for reversals. So when I'm looking for regular divergences, they are helping me spot reversals. Whether it's the uptrend that's going to stop and go down, or it's the downtrend and to stop and go up. Reversals. The hidden divergences are continuation. So when you see a bullish hidden divergence, that's a continuation sign that the trend, is going to continue to go up, or at least there's a higher probability. When you have a hidden bearish divergence, okay, a hidden bearish divergence, then that's an indication that the trend is more likely to resume to the downside. So the highs are getting low, remember, but the oscillator highs are sloping up, okay? Let me say that again. Just want to make sure you get it, guys. The highs are going lower and the highs are going higher on the oscillator. That's a continuation pattern, all right? Now, let's take a look at some of my favorite indicators for identifying divergences. And I'm going to show you one you've never seen before, okay? But, again, I use these all the time. I love the divergences for my trading. I have strategies built around divergences. So number one is the 𝐷𝐸 Pro. I love the 𝐷𝐸 Pro, and I trade it a lot also for day trading. I look for that divergence in the 𝐷𝐸 Pro. TTM Squeeze Pro. Love that one as well. And then the new indicator, the Forecast Pro. So let's just go pull up a random chart and let's see what we can spot. So I'm just going to kind of go anywhere and just go up here to PXD. I don't know, I just randomly picked it. And let me go out to a year and let's see what we got. So right now, we are in an uptrend. So check this out. So we're in an uptrend right now. Price is going up. This indicator is going up. Okay, but look at this. We got a bearish divergence right here. Now that led to a small pullback, but as of right now, not much. We have no divergence there. Okay, so there was one that I was looking at earlier. Let me show you guys. EOG, I think that was it. Yeah, right through here. There was a lot of cool ones through this one right here. So if we look at EOG, then what we're going to do is we're going to spot, I think it was EOG. Maybe it wasn't EOG. All right, so hey, let's look at CRM. I spotted one here. So I want you to see prices going down, and then you can, I don't know if you can see it, but these blue line prints and sloping up. I mean, look at that bullish divergence, right? Price is going down, lower lows, indicator is going up. We did not have a divergence on this Pro or the 𝐷𝐸, but it happened right here. Now, let's see if I can spot another one. So like right here, price was going up. Look at this, boom. Indicator going down, bearish divergence. There was money in that trade right there. So here's another one. Equal high, bam, divergence. Could have made lots of money right there. So let me see if I can, there's charts everywhere. So let's just randomly pull up any chart. Let's go to COP. And let's just back it out and let's see what we got. Okay, let's see what we got here. Remember, I'm going to look for some bearish. Oh, look what's happening right now. Okay, so you can even see it right now going on. So price is going up. Look at this. These are getting lower, right? And look at that. It's causing a correction. But right there, you've got this going down. This one doesn't show a divergence yet, but this Forecast Pro spots these divergences like crazy. Okay? So let's just kind of look back here, see if we can see one on, here we go, here's one on the TTM Squeeze. So price is going down, indicators going up, right? Price going down, indicator going up. That's a bullish divergence. Look, you can see it right here very slightly in the 𝐷𝐸 Pro. You even got this line that says divergence. Mine actually says divergence. So going up, right? Going up. And you can see that line, that line here kind of alerted us even before the TTM Squeeze Pro as well as the Radiant Fire Pro. But check this out. Again, I'm just kind of showing you guys lots of examples. I want to cement these concepts. Okay, here's a good one. So let's look at price here. So in this particular case, price is kind of forming, well, it's kind of an equal high. But look, printed here, and you even got a divergence here, which led to that correction there. This one right there, pop up, bam, led to that big one right there. All right, so Nordstrom. Okay, here's one right here. So let's look at price. Right now, price has got an equal low. Well, I'm going to scratch up in a minute, but the low's down here. Look at that. That is a massive bullish divergence on the Squeeze Pro, right? Indicator going up, the price action going down, and look at this. Even says, look at this. Boom. So this is sloping way up. You can clearly see this. And then check this out on the Forecast Pro. The Forecast Pro is giving us this divergence signal as well. It also gave us this divergence signal, which could have made us a lot of money here. So right here, this leg right here, there wasn't nothing in the TTM Squeeze Pro or even here, but look at that line. That was telling me that the indicator was sloping up, price was coming down, and this move was huge. Now we're forming a double bottom, and we got a massive, massive divergence. So that's another one. Let me see if I can find us some more. All right, so booking holdings. All right, so again, just kind of sharing with you these concepts. So we have an up, so price, higher highs. Look at that. Bam, sloping down. Bam, sloping down. Look at this. Equal highs. Bam, bearish divergence, right? Bam, sloping down. And again, you can see my dot right here, which alerted me. So check this out. So right here on the Forecast Pro, you got this dot. That's a bearish divergence. It led to that move. Then you got this dot, and it led to that move. So the Forecast Pro gives us quite a bit of signals, right? But again, you can still clearly see, like in this case, prices going up, indicators going down, indicators going down. We had this massive divergence way back there letting us know. You can see it with those dots as well. So let's see if we can find another one. All right, so we got us another one here. So this is Caterpillar. So you've got basically these equal highs. So you've got this massive divergence. Now this one might have helped you out for like a spread trade because it was so long. But again, you can see that the momentum was dying as the price was going up. But look at this. So right here, look at these. And in this case, bam, sloping down. See my lines? Bam, bam. So what that's telling you is, well, let's kind of make it where you can see it. This right here was telling me as price was going up, this was sloping down. And then, boom, there's a lot of money in there. Look, again, price was sloping up, divergence. Now, this was getting lower the whole time, and this was getting lower. So as this was kind of grinding up higher, all of these were going down. But in this particular case, we could have caught those mini short legs right there, okay? So even, let's see if I can find another one, just kind of a bullish one. Oh, look at here, price is going down, line is sloping up. Bam, you could have caught that. So like in this example, there's nothing here. I'm not sure if we talked about this already. We're just randomly picking stuff. And it's bullish divergence there. Look, there's bullish divergence there, causing it to go up. So even right here, check this out. You have these kind of equal lows. Look at this. Well, even here, really, you could probably draw it like that. So you got these lower lows, and then you've got price going up. There's kind of there's a divergence right there. That divergence into the squeeze, one of my favorite squeeze trades. And then, of course, we definitely got these. These are alerting us on every small one of these legs. So what I like to do is I like to use this green line. The green line, look at that, going up for the longer term divergence, and this blue line for those shorter term pops, right? Those 1, 2, 3, 4, 5 day pops. Let's see if we can find one more. All right, so let's take a look at this one. We might do a couple more, but again, because I really want to cement these concepts for you guys. So let's take a look at Walmart. Walmart was trending down. There was nothing on the TTM Squeeze Pro that showed me a divergence. We did have a ready, aim, fire, for those of you who know that, but look at this line. It never fails. This printed a green dot in a line, and then look at that. So in this particular case, we didn't have a divergence on the other two indicators, but we did on the Forecast Pro. Boom, look at that blue line. Price down, bam. Can I see it? Any bearish ones? So kind of, let's see if we can find another one. I'm really trying to cement these concepts, and I'm just doing it on the fly for you guys. So let's go to KSU really quickly. And let's see if we can spot anything. Okay, here we go. Another one. Down, up. About as good as you can get. No divergence here. So here's something. As KSU was just kind of grinding it down, look how this was just starting to creep up. There wasn't really much help there, but this line right here was also starting to creep up. Okay? And then look at this one. Oh, wow, just spotted this one. Price going up. The line going down. It's kind of hard to see, but this line prints when it's lower. So this is a, look at that. You could have caught that. There was no divergence there, but there was a divergence right there. So I think you get the idea, right? I mean, go back and watch this many times. These are some of my favorite indicators for spotting divergences. The TTM Squeeze Pro. I love the Ready Aim Fire Pro. And again, I really like the Ready Aim Fire Pro on that divergence into the squeeze, right, after a downtrend, kind of just like this, right, that divergence into a squeeze in a downtrend. And this indicator right here, great news, it's available today. Today is October the 14th. I have not shared this indicator with anybody. It's available today, the Forecast Pro. All right? Hopefully you guys enjoyed that video lesson on divergences, the way that I like to trade divergences, hidden divergences, regular divergences, bullish and bearish, and why they're so important to your trading plan. You must have a trading plan that incorporates divergences into your regular routine, okay? Whether it's hidden or whether it's regular. Now, the indicators that I love, okay, I showed you in this video. TTM Squeeze Pro, okay, the Ready Aim Fire Pro. I am affiliated with Simpler Trading. Those aren't my indicators. You can go to their site and you can buy the indicators, or you can get those indicators through me. So down below in the description, you're going to see the link to the Ready Aim Fire Pro and the TTM Squeeze Pro. If you buy those indicators through my link, I'm going to hook you up with tons of bonuses. Just check in the description all of the bonuses that I'm going to hook you up with. It's over $2,000 worth of bonuses. Now, the Forecast Pro is available today. Okay? Nobody else has this indicator. We created it. It's available today. And all its wonderful signals. If it interests you and you want to check out the Forecast Pro, down below in the description, it should be the top. Okay, down below at the top, it should say, I don't know, new Forecast Pro. Check out that indicator, because I don't just use it for divergences. There's many, many more signals, and it's available right now, and you can't find that indicator anywhere else. All right, everybody. Hopefully you enjoyed today's video lesson. It was a long one, but I hope you found value in it. If you did, do me a favor. Subscribe to the channel if you haven't done so yet. 2, hit that little bell to be notified when I shoot a brand new video. And 3, hey, make a nice comment. I'd really appreciate it. It doesn't cost you anything, and it helps support the channel. Until next time, everybody, this is Trader Jeff Moore, author of the book Trading Part-Time, CEO, lead instructor of the Options Elite University, and I'll see you in the next video lesson.